And let's begin. Thanks, everybody. Tonight we're doing a special review on one little secret harmonic strategy. Now we're going to look at the crab pattern. This is a pattern that I identified, trademarked, and have written extensively about. But I want to add in something I've introduced in my Volume 3 book, kind of bring it out there so people know how to handle this pattern. It's a fantastic structure. We've seen some really volatile action lately, and a lot of you know the crab pattern utilizes a 1618 extension, but some of the other measurements that come into play are really important to pinpoint the exact execution and also to gauge whether or not the pattern is even a valid opportunity. But the key number that we look at is the 1618 level. And now we're going to introduce this 1.902. Typically, the standard stop loss is about a 2.0 or just beyond that. And I'm going to want to go through some examples, but we want to look at this 1.902 with the crab pattern potential reversal zone. This is where we can then bring a little extra measure and understand when price action is volatile, how to gauge whether or not we still have a valid structure. Now, the 1902 is the square root of the 3.618. The 3.618, that's one of our more extreme measurements, and it definitely complements the 1618 primary extension that we look at in this pattern. The key is to monitor the price action at that 1618 and utilize a 1.902 immediate limit. So what does that mean? That means looking at the price action as it hits the 1618. And frequently the crab pattern will have price action that goes beyond the 1618, but still be a valid signal. We'll look at some examples here. But this is the illustration. This is your standard crab pattern that I've outlined in a few of my books. Introduced it in Harmonic Trading Volume 1 back in 2004. Now it utilizes this M formation. It's an extreme structure. We look for this exact alignment, especially with the B point being at a 618. And we're looking for a downside move to the main 1618 leg. That potential reversal zone looks like this, where we have our measures come together that defines the zone. And then the 1618, that's usually the bottom range of our measured support. But what we see a lot of times is this price action that is volatile and exceeds the level. So here is a 15-minute euro dollar, a pretty steep action on the 15-minute, pretty aggressive into that zone. Now look at this area where we come and we hit that 1618, and in this case it stabilized pretty nicely at that 1618 level. The blue line, that's the 1902, and the 2.0, that's where we use our stop loss. But if we saw price action that came into this 1902, we'd be a little bit concerned. Let's look at a bearish example. Again, another W formation looking at a 1618 primary measured projection. Now this is an Australian dollar, bearish crab on a 60-minute. And in this case, again, we have strong action up into the potential reversal zone, a little bit of consolidation, initial reaction, even a secondary test. But this is a situation where we look at the PRZ and utilize the 1902 to determine whether or not this is just something that is going beyond our measured levels temporarily, or is something maybe signaling a potential failed pattern. So there's Aussie dollar on that bearish crab we just showed. That's on the 60-minute. And highlighting this area right at the 1902, right above there, between 1902 and the 2.0. Okay, this is the stop loss. And we use that, this is automatically projected, but we're really focused on the 1618 level. That's the key. And again, the 618 and the 1618, those are our primary ratios. Those can provide us some of the strongest natural levels of support and resistance. I personally think the 1618 is by far a more effective measurement for actual executions. But we can bring in the 1902 and mark that area right above that 1618 so we can gauge exactly whether or not the pattern's really going to work out. Take a look again. There's the pattern, pretty strong coming up out of that, off of that low. Now there's the PRZ, especially after a little consolidation. This might have been a scary retest, staying in the trade, but with that 1902, that kind of gives us that extra level that this is still a valid pattern. So let's look at current example here of Euro USD. That's on a 60-minute, and this just materialized last week, and I posted this on my blog, and I'll show you guys where you can hook up with that as well. But again, another really nice 1618 deep crab pattern. Some of you know this is the variation of the basic structure. The difference is the 886 at the B point, still utilizing that 1618. But again, not even coming anywhere close to the 1902, which tells us this pattern's really strong at the 1618. And that gives us our really defined area. Now, I want to jump right over and look at a couple of live examples that we're dealing with right now. And right now, currently, we're working off of the Harmonic Trader platform for ESignal. And you guys can check this out at the Harmonic Trader website. We've developed this in coordination with my partner at Divergence Software, senior analyst, and this will find all of these patterns and the crab patterns in particular. I really think the crab pattern has been, of all of the patterns we've been generating, yielding fantastic moves, especially in currencies. And this euro definitely was one last week. And then currently we're facing a couple of them. Here's one in the cable. Go back on the 60 here. Now I posted this last week, and I'm looking at this right now here. But again, another situation where beautiful crab structure. This is still currently consolidating in that zone. Not much happening here, but we do have some confirmation. And that's the one other thing that really with the crab pattern that I like to look for is confirmation just beyond the 1618. Down here, this is our 1902 area. So still looking at this execution here down around 88.30, 88.20. Our terminal bar was at 88.23. We're about 10 pips underneath that zone. And our 1902 comes down just above 88. So still assessing this larger trade. But if we're looking to execute off of this pattern, we can look at that 1902 and actually bump up our stop loss. This is something I'm going to be looking at for the week, a real example, and something I'll be following up on the site later on. So do check that out. But that's a perfect example of looking at that 1902 in this area. Are we seeing any stabilization in here at all? Not much so far. Has to happen right in here. I want to look at one other example, show you guys. We work off this pattern monitor, and a really efficient way to kind of scan for various setups. And so here is Euro Yen. Go on a 30. All right, another crab pattern developing, but lower. And I always look at these formations, and the patterns aren't going to generate until we get down past a certain point. In case the crab pattern, it'll generate beyond the X point. But with this formation, I know at a minimum we're looking at a 1618 extension, and I'll even bring in this 1902 and look at that down here of saying that Euro Yen still in a downdraft until we hit this pattern under 129. Just another way to kind of respect the pattern framework, but understanding with this additional 1902, this is a pretty severe downdraft so far. And so this continuation, the likelihood of this thing to continue lower down to these measures and then throwing on top of that 1902 gives you an idea that we're still nowhere near any kind of a long position quite yet. So let me bring up one or two more. And then if you guys, you have a market or two you'd like to look at, go ahead and put a chat in the chat box. And then we're going to be also I'll give away a book here at the end here in a few minutes. And I'm going to ask you guys a question. We're just the first person to answer the question based on coming in and some of the information I gave you about this strategy will win the book. So let me go back to the pattern monitor. Right now, again, we're working off, this is the ESignal platform. And you can get that available on harmonictrader.com. We have other platforms that are going to be available similar to this. I think we've got, for now, for those that are you that are new to this whole platform, I would check out ESignal because we're able to provide a free trial on this one, unlike the other one. So I know it's been a bit of an obstacle, but for a lot of people, with the ESignal, we can get you started, and within a month, you can see all the power that you have here with the pattern screener. So take a look really quick here, one or two more. A few of the patterns we've been focused on in the Harmonic Trader room, especially on these longer term charts. In the futures markets in particular, we've had a number of structures where the patterns are one, telling us still pointing higher as a framework, especially in these aggressive trends, and then looking at them for just the larger measurement basis that they provide. Now here is a great example where beautiful deep crab pattern. And again, we know this, the crab pattern, we see volatile behavior. Look at this, it's a 30-minute chart, explodes into the zone. Now, one simple technique, guys, that I've always kind of stressed about the patterns themselves is that if you're in a pretty strong primary trend, which US equities have been, S&P 500 has been, a simple technique to look at pattern completions and then bring in the 1902 measurement that we know that we can start assuming that we're going to get a little overspill. We'll look at the 1618, okay, in the crab pattern for that reaction. But a lot of you do know about the terminal bar, and the terminal bar is that bar where the pattern's officially completed. We provide that measurement here in the software. But one way to interpret that, even if you guys are drawing them manually, there's other platforms. I know TradingView's got a great tool. And so for those of you that are just manually drawing these by hand, I want you to consider this, is that if you draw a really nice crab structure like this is a deep crab pattern on ES, okay, but we still focus on the 1618. Look into that zone and tell me, okay, do we see one individual bar that gives us any kind of reversal signal? Nothing at that 1618. In fact, it's quite strong. And one of the things that I really stress when you're looking at patterns for execution is you look for the price action immediately after the pattern's completed. So if we're looking at a crab pattern, we know that it's going to usually exceed that 1618. If it's a bearish zone and we don't have a bearish individual bar, we have no reaction, we wait and we look to the next bar. In this case, we'd wait 30 minutes. Look at what's happening here. Trends higher. Every 30-minute interval, higher, higher, higher. Not even a single red candle. Again, utilizing that 1902 area, that's about up in here, as that extra layer above that 1618, and this thing just kind of continues to sail through. You step aside. There's nowhere here in the price action itself that even suggests that this pattern is going to reverse. And we do that a lot. That's something I stress of saying that you don't just place an order right at the numbers. Plenty of time to make a decision. Now that you guys know how to use the 1902 up here and consider that, we look into that zone. We really break it in, and as soon as we hit into here, into the 1618 area, and still green candles all the way up, and we don't even get an individual reaction, you step aside. And you look at that clear through the 1902, there was no execution there. But just a way to take a look at that and analyze what I like to call an overspill, and actually the crab pattern probably is the one harmonic pattern where you have to make that assessment more so than, say, a bat pattern or a 5-0. So you guys have a couple questions. There's a few comments here. If you guys wanted to look at some of that, any individual charts or markets. And I will ask you guys also that if you want to, let me just show it one more time. Check out the ESignal program here. Again, with my partner at Divergence Software, you can access it at the Harmonic Trader website. And if you guys are new and you guys haven't even, you're new to harmonics, at least get the Harmonic Basics sign up that's available here. I'm going to put that in the chat box for everyone to access, and do sign up. Everything that, if you want to get started, you want to learn about the patterns and the details, there's a ton of resources, and we've now opened up one session a week where you guys can attend a live harmonic trading session, and that's on Thursdays, and then come into there and see what we do with it before laying down money. The gold and the gold members have 3 sessions a week, and a lot of other benefits. But at least with what you guys, if you want to get a taste of what this is really about and learn, you can access this through, there's introductory course here. We also have the Harmonic Trader download. So do check out those resources. And then when you have a better idea of what harmonic patterns are about, if you're new to it, you can jump to here at, this is right off of harmonictrader.com, and you can access again through my store. So this is the this is for what we've done so far, and a lot of the software that I've developed for Ninja, and we do have a product for Ninja. Currently, we only have the 7, the version 8. We are reformatting to get it in line with the ESignal, but go to the software store and check that out here right off of my website. So do check all that out. And all right, guys, I'm going to throw out a question here for those of you that got here early. We talked about the 1902, and definitely want to ask anybody. Yeah, here you go. I'll go through 1 or 2 questions. I'll show you the gold too. Okay. We have a couple questions here. First, the crab. There's a crab on. Let's follow it up. For the one question, hey, Patrick, asking about the 1902. Is it for the crab only? And yes, definitely. The crab only. The crab versions, either the deep crab or the regular crab version. Deep crab meaning we have an 886 at the B point. But it's more about how you look at when we get to the terminal bar and we generate and look at the pattern completion. Okay, we just want to, we expect that to be a volatile price behavior. That's just something that comes with the crab pattern. Over time, I've seen that, and this has been a really effective way to kind of understand whether or not that's going to give us really the reversal or not. I mean, here's another one. Okay, here's a reaction. It's a good example of it too, because we see a lot of these where we get, this is pound Aussie on a 30-minute, a very nice deep crab pattern. And look, it goes beyond the 1618 and then goes sideways for quite a bit. Now, that's not bad. That's in a short period of time off from high to low, you're looking at about 50, 60 pips, but not a big reaction. And at least you see in the short right here, here's where we hit the 1618 for the first time. That's a terminal bar. And this reaction that I talk about that you should see is this kind of a thing. Is it hits the 1618 and then you at least get a red bar. Okay, that we call that the terminal bar. We look at terminal bar +1. Now, understanding that our 1902 level is somewhere up here, well, if we see a reaction in between this area, okay, that's how we really pinpoint the structure. We don't need to risk the 2.0 blindly is really also what I'm trying to get at, guys. That this stop loss, that this is built into the software and it'll automatically generate. But what I'm saying is we get the reaction at that 1618. That's where you want to be executing, okay, on the individual bar. And then just keep in mind that 1902. That's probably should be higher than that. But that's the way to look at it, and definitely for the crab. A quick question about the profit targets. Definitely. The profit targets, let's go back to that euro example. This is some of the more kind of the finer points of what I've introduced with harmonic patterns and why we look at harmonic patterns, the first test of a harmonic pattern as a reaction. So and I introduced this actually in my Harmonic Trading Volume 1 book back in 2004, a long time ago. But I think it's integration and people's understanding of why this is so important actually has really emerged. So we look at this and we look at those two profit targets on all of them. And we're looking for the harmonic reaction, meaning we have a clear pattern, and then we're looking for that move to the 382 to the 618. I talk about this in the Volume 3 book. It's really important that you do understand that when we have the initial test of a pattern, you have a defined profit target for at least half your position, and that should be automatic. So even if you're executing up here, we should be securing half of that position at that 382. Even if it goes down another 100 pips, you're capturing this. This is that harmonic reaction move, type 1 move, that is, I think, is cornerstone of anybody's harmonic pattern trading plan. Keep an eye on that and do be aware of that type of reaction. Critical. I'll take a couple more, guys. We'll try to wrap it up. Good questions, good comments. Someone wants to look at the gold membership. I will run through that. And the measures of the top profit targets, again, they're the 382 and the 618. These are automatically measured based off of the pattern structure. The pattern means something. Okay, this whole trading history from X, A, B, C to D is its own technical entity. That's what I like to call them. And we measure off of that pattern for the reactive points. One or two more. GBP AUD, let's look at that. Okay, pound Aussie. Great. That's been quite strong. Yep. Yeah, on a 60, but I'd like to look at that on a daily, because you look at this on the daily. Could bring this up here. Two things here on the daily, and I'm a big fan of daily levels. If I'm looking at currency markets, I want to be fully aware of daily levels. Pound Aussie is breaking out and flashing us a pretty strong 1618 extension. This is also following, look at what happened on this butterfly. And this is why the measurements matter so much. Really beautiful type 1 reaction on the butterfly right here back in December. This comes right down to your 382 target. That's the definition of a type 1 trade, guys. And pound Aussie on the daily, with this recent breakout and with these measurements that we've got programmed, our algorithms are kicking this for a big 1618 breakout. It was kind of like that Euro chart I was showing where that Euro chart, I think it was like a 30-minute, where pattern was flashing a lot lower. And that's what this is. And if we know that a crab can even go to as high as a 1902, well, it's probably up like around there, under one. It's a long way to run. It's going to take time, but this is the structure that's really dominating that daily trend. So I would look at that, and I would definitely, any currency markets, I would look at the daily levels. Would I say the 1902 is a deal breaker? I think, yeah, based on if you're looking at how the price action reacts, and if you don't get a reaction between, say, the 1618 and the 1902, it just sails through. Because the crab does have extreme behavior, that is common. It's a way to kind of negotiate when the trend is just blowing away that 1618. So yeah, that's a good way to phrase that. One or two more time frames. What's the best time frame? I really like the 60-minute. If you're a day trader, I kind of like pound Aussie and these pound Canadian dollar. Some of those on a 5-minute. But I think the 60-minute patterns have been really nice, really clear. Wait for them to come to you. Here's our screener. That's a 30-minute. And there's some patterns here. Some deep crab. There's on the 30-minute got blown out. But I like that 60-minute, and I always am checking once a week daily time frames. If the 1902 is broken, can it be a continuation? Absolutely. That's a really that's a definition of a harmonic breakout, and that usually can be extreme. This is a harmonic breakout. This butterfly got violated. We've seen a secondary test now that violates that. That's definitely that same kind of idea of a continuation. So definitely check that out. Euro. You guys want to look at Swiss franc really quick? All right. I'll wrap it up purely after that. And who's ready to win a book? On the daily level, no. Well, you had that bat. Here's that bat in the Swiss franc on the daily, but that was quite a ways ago. And look at how that failed. When that failed, that just washed through. Nothing really there on there. I think Euro is going just sideways. Euro needs some time. 4-hour chart? Sure. Chris, yes, this can be used for stocks. And a lot of really great structures. Just stick with the most liquid ones. So this crab pattern here, no, that failed. But again, looking at for the reaction initially, and this is another thing about the initial test that I want to stress for everyone is that we want to see a reaction off the zones within, say, 5 bars after the initial test. Sometimes you get this consolidation that just drags sideways. If you guys are in a pattern trade that's like this and it drags sideways, and you think about it, this is a 4-hour chart, really nice pattern, but look, it just spends days going sideways. If you can't get to the 382 within a short period of time, you scalp that out, or you take the small loss or break even. I think that, especially this kind of a thing. But do be aware. I think that was what you were referring to, though. Profit levels. Hey, what's happened? Ralph, how are you? Yeah, that's A to D. Correct. We measure them off the extremes of the patterns. So do check that out. Brandon, hey, yeah, we've got HSI alerts and we've got RSI BAM. And so we do have a whole lot of functionality built into that, but I'll save that for another time. But yeah, there's a ton of stuff here, guys, that we've done with this, and it's all automated. That's the dream of it. All of this is automated. So The zones, the patterns, the algorithms, the ABCDs, everything is automated. So this is the breakthrough for me personally, and to share this with the world, to give you guys these tools is just unprecedented. I know there's a lot of harmonic scanners, and maybe go out and spend 200 bucks and somebody's going to give you some stupid add-on. Let me tell you something. The amount of money you're going to lose trying to trade off of that garbage versus what I have right here is just no comparison. And so what my goal was to make this as affordable, if not free, which we have. We've made this for ESignal at least completely available. So you get on Harmonic Trader here, guys, and just check out the instructions, access through our harmonic pattern collection with our partner here at Divergence, and just go through, get set up with ESignal. This is really what I recommend. And then the other thing, there was the comment, yeah, about the gold. To check out for the gold membership, guys, we do have a trial, but I'll show you what's in here because there's like 30 hours of webinars in here. We've got the 3 sessions as well, okay? But in here is all the live sessions that you guys can check, and I'm putting out several trades a week. We go through live examples. Tuesdays, we do short-term trading. And then the Harmonic Trading Library is, there's 30 hours in here of all the advanced everything from years of my stuff. So everything's in there. And then finally, the books, the volume 1 book is in there. So if you guys are interested, even if you want to get the trial, guys, you can cancel the trial after 10 days and you can keep the books and watch the videos. So thanks for that shout out, for that plug. I do appreciate that. We'll post this up. Yep. And I think the crab, guys, I think, really look at the crab. Hey, Mark. Yeah, you're asking me what's consistently the most successful pattern. I'm really been leaning on the crab pattern and the deep crab pattern. I think they've been giving us great reactions time and time again, as well as, really defining great zones of what to look for. So, and that was today. Oh, there's a beautiful Gartley right there. I just cranked on 4-hour Aussie Kiwi. That's what this software does. So I didn't want to get into the Gartley tonight, guys, but I'm just on the fly clicking the software. So maybe we'll do another session where I just take questions and go through everything. So guys, okay, here's the question for the book, for the volume 3 book. I started out today talking about the 1902, and I want to ask you guys, how is the 1902 derived? The first person to answer wins it. It is derived from bang. Very nice. Okay. Mr. Kurt J. Coe, Clifford Kurt J. Coe, you were fast. Can you please send me an email to harmonictrader@harmonictrader.com? I have your name. I will send you a volume 3. We'll do this again next week, guys. I'm going to really listen. I'm really opening this up. I want everyone to understand what's going on here. Okay. I've got the tools now, and I'm going to open up the free resources so that you guys don't have to pay for this nonsense. Get the software. You learn what you need. If you really want to take it to the next level, that's when you get with me on the level 1 education, and also take a look at some of my other webinars here. But that's what we're doing, and this is all coming down right now in the next week over week. It's the takeover, harmonic takeover, and y'all know what that's about. So everybody, thank you so much. Great session. Mr. Clifford Kurt J. Coe, please send me your address. And guys, I'll send out another email. Make sure you get on the basic membership plan if that's free, and you can sign up there and you'll get a follow-up and you'll get this recording. Get it all on Harmonic Trader, and we'll do another one of these next week. Thanks, everybody. Have a great week trading.